I wanted to record this sequence. This is going to be very quick on a scenario that it would be okay to take a trade pretty much right at the open or within 10 minutes of the open. So the context is here we've got prior day value area right up here. We've got the overnight activity, and then we've got prior day low and then overnight low. So pretty self-explanatory. Here is the open. I'm going to hit play. And essentially what we're going to be doing is watching the first 10 minutes, and I'll give you a rundown of why it would be okay to take a trade right here. Some additional context would be, obviously we are opening below the prior day value area, but still within range. You can see we're opening at the lower part of the prior day range. And so the bias coming into today would just simply be short, right? We're opening up outside of value at the lower end of the range. So your automatic bias should be short unless given information to suggest otherwise. So I'm going to hit play here and we're going to take a look. All right, we are 1 minute into the open. We came down to this prior day low, which is a mechanical level. We bounced off of that once, okay? So that makes that a weak level, a weak reference that has a higher probability of price revisiting that later on. So let's hit play here again. Moved away from it, chopping around the open price. Chopping around the open, you can see we're about 4 minutes in. Look, we came down and hit it again, right? So this is the concept of price knocking on that door multiple times means it has a higher likelihood of breaking through that. The more times that we tap a level, the weaker it becomes and the higher probability of price moving through that level, right? And how far price moves below that level is kind of a crapshoot. You monitor for continuation. But the idea is if you're waiting for some signs to get short, this would be your sign. We're 8 minutes in. We came down and hit that level 2 times. So let's see, hit play, see what else happens. 2 times, we kind of chopped around it for a moment, and then we finally broke through. I think we moved down a little bit, but essentially the thought process here would be, okay, we're opening up below value. Instead of just blindly taking a short, right at the open with your stop loss, somewhere up here somewhere, you want to wait for the sign. And again, the sign is we came down in a period and hit that level, I think 2 or 3 times, or even on the 3rd time, we kind of were chopping around it, making that level weaker. So that's when you essentially would take the short with your stop loss above the high of the day. And again, just monitor for continuation. So I wanted to play that sequence because trades right at the open are very, very choppy. You have low probability of follow through. But when you do come into situations like this, where one, we're opening below the prior day value at the lower end of the range, so that's one data point to suggest we should go short. The overnight activity here is net short, so we have most of the activity happening below the settlement of the prior day. So, we would like to see an overnight correction. Usually those happen, I think, 60 or 65% of the time, and they should happen fairly early on. I don't know how strong that data point would be right here, 10 minutes into the open. Typically you see price try to make that correction in the first half hour or so. So that's like a half a data point, I would say. And then lastly, we just came down and kept hitting that mechanical level of the prior day low. We hit it 3 different times. So at that point, after price had moved up, above the open and failed to continue, that essentially means, let's start eyeballing a short and then obviously monitoring for continuation. You have very little information from the market profile at this point of the day, 10 minutes in. Really all you can lean on is what's happened in the past. And then if you're correct, if we just continue to fall, you'll watch for things like one time framing, lack of poor high or poor or weak structure, rallying off a weak structure, things like that. So anyway, that would be an acceptable short given the circumstances.